YieldMax just released the Group B dividends announcement. Let's get into it. This video is not financial advice, nor is it a recommendation. Please do your own due diligence before investing into anything. The announcement date is today, October the 9th. The X date and the date of record are both tomorrow, October the 10th. Date of payment is October the 11th, the day after that. Starting with YMAX, which comes in at 20.44 cents a share this week. YMAG with 28.23 cents a share this week. NVDY at over $1 at $1.09.99. Dips at 68.59 cents. FBY at 92.31 cents, almost $1. GDXY at 60.60 cents. BABO or BABO at $1.29.32 cents. I'm actually surprised at this one. JPMO at 37.68 cents and MRNY at 37.62 cents. PLTY will end up on this list for Group B, but they're going to be on for next month, not this month, because PLTY just came out yesterday. Much like the Roundhill dividend video, I decided to plug in some of these ETFs into Seeking Alpha to look at the total returns versus the S&P. And I wanted to see if any of these were legitimately a better investment than just investing in traditional growth stocks. So, of course, the first one I plugged in was NVDY, and it's the big, giant orange one sitting here on this graph. And no surprise, it's coming in at 194.48% since its inception date, versus the S&P at the same date until now comes in at a total return of 42.43%. So, NVDY, of course, is going to do well because NVIDIA has been doing very well as well. But even with the capped gains, it is very much beating the S&P 500 with total returns. Dips, on the other hand, is doing its job and being inverse, but considering that NVIDIA is actually doing very good, Dips is, of course, doing pretty bad at negative 17% total returns. One of the ones I wasn't really thinking to look at too much until it just struck me that it had a good dividend this week, BABO coming in at 22.89%, and that's actually competitive against the S&P, considering how short of a time it's been on the market. That's not bad. FBY is coming in at a total return of 61.22%, beating the S&P with, again, less time on the market if we're considering from the NVIDIA inception date. So while, of course, the big winners like NVIDIA or anything that will trade against NVIDIA will do well, even with capped gains, something like FBY or BABO, that's a little more boring. You don't really hear too much about it. There's not much hype around it. It still comes in and it's just chugging away. It's still growing. The capital gains are still there. I would venture to guess that FBY is experiencing more capital gains than dividend gains, but a gain is still a gain. Let me know what you guys think. Do you prefer the boring but slow and steady approach, or do you prefer the hype approach for something like NVIDIA? Which tickers do you have? Which tickers are you adding to? Let us know in the comment section down below. If you like this video, you might also enjoy this one here on the screen. Subscribe to join the Cash Flow Club and hit the bell for notifications so you don't miss a single video.